Thank you. Welcome to the Office of Tax Appeals. We're ready to begin with the appeal of Huff Foods, LLC. OTA case number is 191255557. The oral hearing will be live streamed. Today, we do not have a stenographer present. However, a transcript of this hearing will be made after the fact based on the YouTube stream. So it is important that we please all turn on our microphones before speaking, and also that we speak loud and clear. Thank you. The Office of Tax Appeals is an independent and neutral agency. It is not a tax court. All three judges are co-equal decision makers, and we can all ask questions at any time. I'd like to offer a few reminders to help the process run as smoothly as possible. First, again, please ensure your microphone is not muted when you speak, otherwise your voice will not be picked up on the live stream, even though we can hear you in the room. Second, you need to speak into the mic for it to pick up on your live stream, our live stream. And these proceedings are being broadcast live. Anything that is said today and any information shared today is publicly viewable on the live stream. With that said, are there any questions before we go on the record for appellant? Yes, push the button and a green light will come on. Okay, you got to get kind of close to the microphone to talk into it.
Okay.
Any questions?
I have no further questions.
No
And
questions.
Cdtfa?
No questions.
Thank you. We're ready to go on the record. We are opening the record in the appeal of Huff Foods, LLC. The OTA case number is 19125557. This matter is being held before the Office of Tax Appeals. Today's date is October 19th, 2022, and the time is approximately 1 p.m. This hearing is being convened at Sacramento, California. Today's hearing is being heard by a panel of 3 administrative law judges. My name is Keith Long, and I will be the lead administrative law judge. Judge Teresa Stanley and Judge Andrew Quee are the other members of this tax appeals panel. All 3 judges will meet after the hearing and produce a written decision as equal participants. Although the lead judge will conduct the hearing, any judge on this panel may ask questions or otherwise participate to ensure that we have all the information needed to decide this appeal. For the record, starting with the appellant, will the parties please state their names and who they represent?
My name is Anna Huff, and I represent Huff Foods, LLC, DBA Salad Farm.
Thank you. Actually, can you just talk a little louder and repeat?
My name is Anna Huff, and I am the owner of Huff Foods, LLC, DBA Salad Farm.
Thank you. I think that was better. And who is with you, Ms. Huff?
He's just accompanying me.
Okay, thank you. And Cdtfa?
Nalan Samaravicram, a hearing representative for the department.
Jason Parker, Chief of Headquarters Operations Bureau with the department.
Chad Backus with the department's legal division.
Thank you. So today we have no witnesses. We have the following exhibits for this appeal, consisting of Cdtfa Exhibits A through J. At the pre-hearing conference, taxpayer had no objections. Has this remained true, Ms. Huff?
Yes.
Thank you. They are admitted without objection. Additionally, after the pre-hearing conference, appellant submitted an exhibit index identifying Exhibits 1 through 6. At the pre-hearing conference, Cdtfa did not have any objections to Exhibits 1 through 4, which were previously labeled A through D. Does Cdtfa have any objections to Exhibit 5 or 6?
No objections.
Thank you. Cdtfa Exhibits A through J are admitted without objection, and appellant Exhibits 1 through 6 are admitted without objection. There are 2 issues in this appeal. They are whether appellant has shown that adjustments are warranted to the audited understatement of reported taxable sales, and 2, whether the understatement was the result of negligence. This appeals hearing will take approximately 1 hour. We will begin with the appellant's opening presentation. Ms. Huff, you have 15 minutes to make your opening presentation, and you may begin when you are ready.
Okay. I apologize. I'm going to be reading it off my paper. But Huff Foods LLC, DBA Salad Farm, argues before the panel that it is acceptable to request the adoption of a second approach in order to arrive at a fair estimate of sales and use tax that represents the business activities during the audit period. That it should reassess the sales projections given that the large deposits noted on bank statements do not correspond to any sales, and relief from penalties due to casualty loss. First and foremost, the California Department of Tax and Fee Administration has only used one technique to calculate taxable sales for coming to its conclusions. The only available method is the appellant's presented bank statements. The bank statements clearly show overall amounts, but they do not break down the proportion of sales of cold versus hot goods. There is no observation test applied by the Cdtfa for its findings. Since salads are the restaurant's primary entree and cold products are therefore involved, it is unfair for the Cdtfa to calculate a tax sales percentage. Despite the fact that hot dishes are on the menu, Salad Farm's restaurants are known for their salads. Salads are the main reason customers visit any Salad Farm restaurant. Second, the Cdtfa has made an assumption and is claiming sales tax on all purchases of taxable hot foods and carbonated beverages totaling $794,413 from January 1st to June 30th, 2016. Bank records show that deposits totaling $794,413 were not entirely generated through sales. To keep the company viable, hard money loans were placed into the account. In a copy of a section from a bank statement that details electronic debit withdrawals made by Untitled Capital, funding metrics, and Quick Fix Capitals to pay back borrowed funds was enclosed as Exhibit 1. Additionally, the Cdtfa should make the effort to use at least a second method in addition to the bank statements.
Ms. Huff, I'm sorry, 2 things. First, would you mind slowing down a little bit so that I can take notes?
Okay.
And second, you said on deck capital, funding metrics, and what was the third company?
Quick Fix Capital.
Quick Fix Capital. Thank you. Continue.
Additionally, the Cdtfa should make the effort to use at least a second method in addition to the bank statements in order to establish and prove the correct number of taxable sales, such as by comparing other Salad Farm restaurants. I ask that the OTA compare the primary product that the Salad Farm restaurant in question offered to those of other still opened locations, because the Cdtfa has only taken into account the current estimate of taxable sales. Such records are not available to me, but the Cdtfa or OTA are authorized to examine such database. The menu that was attached as Exhibit 2 is from a comparable Salad Farm restaurant and includes a detailed description of each salad as well as hot items. However, the restaurant's specialty and main source of revenue for Salad Farm restaurants has always been the selling of salads. I'm not sure why the auditor advises applying the 80-80 rule, since the majority of customers entering a Salad Farm restaurant do so to place a salad order, a cold product. The restaurant's name was Salad Farm, and salads were the primary meal. Cold food products made up the majority of its sales. Salad Farm is not at all claiming that it only offered cold food products. Rather, this had goods made for a small portion of sales and not 100% as the Cdtfa has stated. As a result, only a small number of hot items were sold. Once more, the Cdtfa and or the OTA can gather information from different Salad Farm restaurants to draw a valid comparison and observation. I am requesting that the restaurant be measured and examined with a reasonable distance. All Salad Farm restaurant sales structures include historical data that demonstrates that they have also sold hot items. But these are not the principal sellable items, and these hot items do not truly represent Salad Farm restaurant's true product. Furthermore, on February 28, 2016, Salad Farm's doors were closed when the second robbery took place, 6 months after the first robbery, Exhibits 3 and 4. The restaurant's interior was ostensibly destroyed. Nothing in its entirety was still present. Complete destruction of the counters, computer, hard drive, and POS system makes the 10% negligence fine for failing to submit any records disproportionate, given that Salad Farm had no control over the situation. Salad Farm rejects to be held accountable for negligence or a refusal to furnish records due to this unprecedented circumstance. Conclusively, Salad Farm is requesting that historical information from other Salad Farm restaurants be gathered in order to conduct an appropriate observation, that a sincere effort be made to use at least two methods to reach a verdict, and that it be taken into account that records were only kept digitally and were destroyed during the robbery. Salad Farm didn't intend for or want to be in this bad predicament. Thank you.
Thank you, Ms. Huff. I have a few questions, and I'm sure my panel members will have a few questions as well. First, looking at your Exhibit 5, the amended sales and use tax returns, there were some discrepancies, so I wanted to make sure that I was clear. First, the amended sales and use tax returns, when you add them all together, indicate total sales of $740,000 or $740,994, and non-taxable sales of $674,452. which would result in taxable sales of $66,542. But when you look at the amount of taxable sales indicated on those returns, it only comes up to $61,476. This looks like it's just the result of some math errors. Do you know which amount do you assert to be correct?
The amended returns were the correct amount that I did file as Exhibit 4, I believe.
It's Exhibit 5, but what I'm saying is the total sales minus the taxable sales on the amended returns that you filed are more than the amount that you listed as taxable sales on those same returns.
Yes, that is correct. There was an error, as I did the first time I did myself the sales, the quarterly sales tax returns without taking any proper deductions of the products, and so therefore that's why they were corrected.
Okay. And then, so on the original sales and use tax returns that you filed, you reported taxable sales of $60,587, which is less than the amount that you reported on the amended returns. So do you concede to the difference? It's about $1,000 difference.
I don't exactly remember, and in this case.
Okay. Thank you. And then with respect to, I know that you only kept digital records. What were the sales and use tax returns based on, the amended returns? How did you come to those figures?
I think that the CPA that helped me to do the records, it was also based on what the Cdtfa had come up with, except again, he said I had not taken any proper deductions for the coal products, and that was one of the errors that it was found with him.
Okay. And then also, finally, with respect to the amount of total sales that are reported on those amended sales and use tax returns, it's $740,994. You also asserted that you received loans of $145,068. That's approximately, when you add those two numbers together, it's about $20,000 more than you deposited in the bank during the audit period. Can you explain the difference between those amounts, or between the amounts received and the amounts deposited?
If there was any cash involved, it's probably used for the purchase of products for the restaurant, and that might have made the difference.
So the restaurant wouldn't have deposited all of its cash?
Just when it was a loan. I had a couple of personal loans, and they were handed to me. So with that, I would purchase some of the products. There were personal loans from friends and family members.
Okay. Thank you. I don't have any further questions. I'm going to ask my panel members if they would like to take this opportunity to ask you some questions. We'll start with Judge Stanley.
Yes, I can see in the exhibits that you presented evidence of just one deposit from what appears to be a loan for $8,780, and that would be Exhibit 1, page 3.
Right.
And I was wondering if you can point us to anywhere where it shows evidence of other deposits for loans during the audit period.
The deposit, I did not go through the entire statements, the whole audited period. And again, when I made the deposits, whether it was in the form of a check, I just went and deposited it to the bank. But when you put it in the bank, it doesn't show that it's a loan. In that particular case, it came directly, it was made as a direct deposit. But many of my loans were not. The check was sent, like mailed in. It wasn't a direct deposit, and so I would just make the deposit, but it did not show that it came from a loan. I just made the deposits.
So is there any way, when we're looking at what we have in the evidence that we do have here at the Office of Tax Appeals, is there any way for us to identify which of those deposits are loans?
Not in the bank statements, because I will make deposits. Like if I made a deposit of money, a check that it was sent to me as a loan, I would deposit also with sales. I would just make one deposit. That was one of the main issues that I had. I cannot break down. And I did go back to the bank and ask them if it was possible to get any copies of checks that I had deposited in the large amounts, so that I could continue with the business, and they said it was not possible. As a matter of fact, they said I was fortunate to get the statements because it's such an old account. So there's no way that I can pull up the deposits made through loans that I made to the bank.
Okay, thank you. I don't have any further questions.
Thank you, Judge Stanley. Judge Quee, do you have any questions?
Sorry. Yes, this is Judge Quee. I just had a couple questions. And just to make sure we're on the same page, because from my understanding, during your presentation, you were talking about making sales of salad, which are cold food. Did you sell the salads for consumption on the premises, or was that to go?
Mainly they were to go. Salad Farms is mainly a lunch restaurant. People would order online, would come and pick up their packages. Yes, we did have a seating area, but like any other place, at lunchtime, everybody makes their 90%. I would say a lot of it was just to go.
Okay, so you're not contending that the sales of salad for consumption on the premises are taxable. You're just saying that most of your sales were to go, and the to go sales were non-taxable.
With the right. But even though the salads sold to people that would eat at the restaurant, I mean, they're cold products.
So you're saying that salads are, you're requesting an adjustment for all salad sales, not just regardless of whether it was sold at the restaurant or sold to eat at home.
Correct, because anybody that would buy a Caesar salad is a cold product. Right,
Okay.
and if you sit down at the restaurant, yeah, okay, it's there. But if you take it to go, I see it as the same thing.
Okay. And another question, on Cdtfa's decision, they included a copy of a receipt.
Yes.
For the 373 West Bonita Claremont. That's the store at issue, right?
That was the restaurant. Yes.
Okay, and are you able to address the concern there that the store collected sales tax on the salad sales?
Not on the salads, on the part that if they order let's say a hot chicken to go on the salad, then the portionable plate, it would be the hot food, not the cold salad.
Okay.
And that was one receipt, that anybody could have posted. I mean, if we need to have much more than one receipt in order to be able to see the difference.
And you don't have those other receipts because of the burglary?
Yes. What happened at the time, the whole place was completely destroyed, and when I was called in and I walked into the restaurant, there was not an area that you could not walk, that it was so broken glass everywhere. And during the first robbery, what they found was my petty cash with $500. After the first robbery, I would not leave any cash at all. I assumed that these people, when they robbed on the second time, they looked and they could not find any cash, and that's when everything got destroyed. Unfortunately, I was in a bad stage, and what I did personally, when I saw all the pieces of computers and glass and everything, I picked everything up and went and threw it away in the dumpster behind the building, where I would normally throw my trash away. I didn't keep anything else, and immediately I closed the restaurant that evening.
Okay. And one other question. So there's also an exhibit showing a salad menu, and the address there is different. It's 3600 Soto Street in St. Vernon. Is that
right? That's why I mentioned that I had included as Exhibit 2 from a comparable salad farm restaurant, because I don't have any menus from my restaurant.
Okay, I understand now. Thank you. So I will have Cdtfa during their presentation, as understanding it was only in regards to the to-go orders. And I don't have any other questions at this time, so I'll turn it back to Judge Long.
Thank you, Judge Kui. My understanding is that Judge Stanley had actually one more question.
I had one more question, but I think you just answered it. When you had the burglary where everything was destroyed, did you make a police report with specific items that were stolen or damaged?
The police came in and they wrote a report, but when I went back, I didn't get a copy right away, but when I went back to get it, whatever I submitted, that's the only thing that they could provide for me at the Claremont Police Department. The history that shows that the robbery was in progress, but I could not get anything else. And yes, they wrote everything down, what everything had been destroyed.
Okay, and I think you just answered one of Judge Kui's questions by saying they destroyed the computer. They didn't steal it.
No, everything was broken into pieces.
And you threw it away.
Yes,
okay.
Yes, I did.
Thank you. That clarifies it.
Thank you. And now we'll turn to Cdtfa. Cdtfa, you have 30 minutes. You may begin when you're ready.
Thank you, Judge. Appellant is a California limited liability company that operated a franchise restaurant selling various cold and hot food items with draft beer, carbonated and uncarbonated beverages in Claremont, California. For cold food, Appellant sold mostly made-to-order toasted salads. Appellant's customers could select from a variety of ingredients, dressings, and meat for their salad orders. The restaurant had indoor and outdoor seatings, and that will be on your Exhibit E, pages 19 and 20. Appellant obtained a seller's permit with an effective date from April 12, 2013 through June 30, 2016. Appellant closed his business on June 30, 2016 with no successor. The department audited Appellant's business for the period January 1, 2014 through June 30, 2016. During the audit period, Appellant reported taxable sale of around $61,000, and that will be on your Exhibit A, page 17. During our presentation, we will explain why the department rejected Appellant's reported taxable sales, why the department used an indirect audit approach, how the department determined Appellant's unreported sales tax for the audit period, and why the department recommended a negligence penalty for this appellant. During the audit, appellant failed to provide complete sales records. Appellant did not provide complete documents of original entry, such as POS data, POS sales receipts, and credit card sales receipt for the audit period. In addition, appellant failed to provide complete purchase invoices or purchase journals for the audit period. Due to appellant's lack of reliable records, the department determined that further investigation was necessary. The department completed 4 verification methods to evaluate the reasonableness of appellant's reported total and taxable sales. First, the department analyzed appellant's reported sales for the audit period, and that will be on your Exhibit B, page 27. The department noted an average reported daily sale of $78, ranging from as low as $11 to as high as $227 for the period January 2014 through February 2016, and that will be on your Exhibit B, page 27. The department viewed this as a very low daily sales for a restaurant selling draft beer. For comparison, appellant's average daily sales based on audited sales were around $1,000, and that will be on your Exhibit H, page 1. Second, the department requested a federal income tax return from the Franchise Tax Board and received appellant's original and amended federal income tax returns for years 2014, 2015, and 2016, and that will be on your Exhibit H and Exhibit I. The department compared appellant's reported total sale of around $61,000 to the department with sale of $730,000 reflected on appellant's amended federal income tax returns, and calculated an overall difference of around $670,000, and that will be on your Exhibit H, page 2. Third, The department compared Pellant reported total sale of around $61,000 with a bank deposit of $866,000 and calculated an overall difference of around $805,000 for the audit period, and that will be on your Exhibit A, page 29, 41 and 42. Pellant only reported 7% of his bank deposits as sales for the audit period. Fourth, the department obtained Pellant's credit card sales information for the period January 2014 through February 2016, and that will be on your Exhibit A, page 43. The department compared the reported total sales to the credit card sales and calculated an overall quarterly credit card sales ratio of around 600%, ranging from as low as 230% to as high as 3,600% for the period April 1st, 2014 through December 31st, 2015, and that will be on your Exhibit B, page 23. This is an indication that not all of Pellant's credit card sales and cash sales transaction had been reported in its original sales and use tax return for the audit period. In contrast, based on the bank deposits information, the calculated credit card ratio was around 55%, which the department determined to be more reasonable credit card sales ratio, and that will be on your Exhibit A, pages 41 and 42. Pellant was unable to explain the reason with reasonable documentation for the low reported daily sales. Amended federal income tax return differences, bank deposit differences, high reported credit card sales ratios. Therefore, the department conducted further investigation by analyzing Pellant's bank deposits information, credit card sales, and credit card sales ratios for the audit period. Due to lack of records and some documents relating to sales and merchandise purchases, the department was not able to determine Pellant's sales using a direct audit approach for the audit period. Therefore, the department determined Pellant's audited sale of around $794,000 using its bank statement for the audit period, and that will be on your Exhibit A, page 38. Based on the Pellant's business, the department noted Pellant offered a variety of hot food such as soup, grilled sandwiches, quesadillas, oven-baked potatoes. The department also examined Yelp reviews which revealed that Pellant had tables and chairs inside and outside the restaurant, and that Pellant charged sales tax reimbursement on the total sale of food, which included both hot and cold food to go, and that will be on your Exhibit B, page 33 and 34, and Exhibit E, page 18. Based on the foregoing, the department determined that more than 80% of Pellant's sales are from sale of food, and more than 80% of the Pellant sale of food are taxable. Thus, the department concluded that Pellant fell under the 80-80 rule, which means that all sales are taxable. As such, the department considered the ex-tax sale of around $794,000 to be Pellant's audited taxable sales for the audit period, and that will be on your Exhibit A, page 38. The department then compared the audited taxable sale of around $794,000 with the reported taxable sale of around $61,000 to determine unreported taxable sales of around 733,000 for the audit period, and that will be on your Exhibit A, page 38. The department then compared the unreported taxable sales with a reported taxable sale of around $61,000 to calculate an error rate of around 1,200% for the audit period. Appellant did not agree with the audit finding for the audit period. Appellant claimed that it is entitled to an adjustment for cold food to go for the audit period because the major meal on its menu was salad and sales primarily comprise of cold food to go. Appellant did not provide any documentary evidence to support its cold food to go. However, to support his the Appellant's contention, Appellant provided his menu and amended sales and use tax return for the period January 1st, 2014 through March 31st, 2016. Appellant also provided Appellant's amended state income tax return for years 2014, 2015 and 2016. The department reviewed and analyzed Appellant's amended and sales tax returns and ultimately rejected them. Appellant amended its total sales and taxable sales for the audit period. Upon examination of Appellant's amended sales and use tax returns, the department noted that the Appellant did not provide any source documents or POS download with all folders to collaborate the figures listed in the amended sales and use tax return. Appellant also did not provide any documentary evidence to support its cold food to go sales. The department reviewed the amended sales and use tax return and determined that an overall recorded quarterly taxable ratio of around 9%, ranging from as low as 5% to as high as 22% for the period April 1st, 2014 through March 31st, 2016, and that will be on Exhibit J, page 1. These figures show that the recorded taxable sales ratio for the audit period was significantly low for this type of restaurant. As to Appellant's contention that the majority of his sales were cold food to go, based on an examination of Appellant's provided menu and online information, Appellant offered a variety of hot food items in addition to cold food and draft beer. In addition, online pictures of Appellant's business location show indoor and outdoor seating area, indicating that Appellant sold food prepared for immediate consumption at or on Appellant's premises, and that will be on your Exhibit E, pages 16 through 20. There is no dispute that 80% of Appellant's total sales consist of food sales, and based on the fact that Appellant sold hot food and had indoor and outdoor seating, the department determined that more than 80% of Appellant's retail sale of food is taxable. This in turn indicates that the 80-80 rule applies to Appellant, and Appellant's sale of cold food to go are also taxable. Appellant has not provided sales record or POS data showing that less than 80% of its sales were taxable. The department determination is corroborated by the image of a POS sales receipt dated April 4th, 2015 from Yelp, showing that Appellant charged sales tax reimbursement on both hot and cold food to go. the fact that the appellant charged sales tax reimbursement on all of its sales show that it believed all its sales were taxable. And that will be on your Exhibit B, pages 33 and 34, and Exhibit E, page 18. Based on the foregoing, the department determined that appellant did not provide reliable documentary evidence to make any adjustment to the audit findings. The department determined the unreported sales tax based upon the best available information. The evidence shows that the audit produced fair and reasonable results. Appellant has not provided more reliable information to meet its burden of proof that the audit results are overstated. The department imposed a negligence penalty based upon its determination that appellant's books and records were incomplete and inadequate for sales and use tax purposes, and because appellant failed to accurately report its taxable sales. Specifically, the department noted that the appellant provided limited record for the audit period, and appellant failed to provide document of original entry to support its reported sales tax liability. As a result, the department had to compute appellant's taxable sales based upon the best available information. In addition, the audit examination disclosed unreported taxable sale of around $733,000, which when compared with the reported taxable sale of around $61,000 for the audit period, resulted in an error rate of around 1,200%. This high error rate is additional evidence of negligence. Appellant has not provided any reasonable documentation or evidence to support an adjustment to the audit finding. Therefore, the department requests the appeal be denied. This concludes our presentation. We are available to answer any questions the panel may have. Thank you.
Thank you. Judge Stanley, do you have any questions?
I do not have any questions at this time. Thank you.
Judge Quee, do you have any questions?
Yes, thank you. So one question is, I understand Huff Foods was a franchisee of Salad Farm. I mean, just in relation to whether or not other Salad Farm franchisees had, allowances for cold food to go separately accounted for. I mean, I understand you can't say anything confidential about other taxpayers, but I'm wondering, as far as this taxpayer is concerned, you do have that information, and I'm not sure if there's like the possibility for disparate treatment, because she's saying, and I understand that, even under the regulation, that if you have separate accounting for cold food sold to go, that is something that would be allowable. I'm just wondering if there was if I'm allowed to ask if there was consistency in how that was treated, the audit of here versus other potential franchisees in the same business. If that's something that was considered, or if that wasn't even something considered by Cdtfa during the course of the audit.
The department tried to obtain the actual sales information from the franchisor, but they did not provide the information. But based on the sales receipt that the department found indicate that appellant charged sales tax on both cold food to go and hot food to go, and based on that we concluded that the taxpayer charged tax on everything. And if the taxpayer provided any sales documents to show that they recorded cold food to go separately, then we should have make an adjustment.
Okay, so as far as the receipts that you're referring to, were those two receipts that were printed from Yelp, and I think it was Exhibit 2 to your decision? There was is that what you're referring to, or were there additional receipts in it besides just those two? Because it wasn't entirely clear to me from the two available receipts that was cold food, because if you're looking at it, it's a Caesar salad, ham and cheese panini with add spinach and chicken. I'm not sure if what we're saying is cold food there, or so I guess it wasn't entirely clear to me what if you're referring to the same thing that I'm looking at in the record.
That is page 34, Exhibit A, and also Exhibit E, page 18.
Judge Quee, I'd like to point out that in the presentation by the appellant, she mentioned that Caesar salads were cold salads, and the to-go receipt that is on, it's Bates number 225. It's part of Exhibit B. It has a Caesar salad listed on there, and the top of the receipt shows that it is a to-go transaction, and tax was charged on the entire receipt.
Okay. And I guess Caesar salad could be cold. The chicken's cold. Okay, so I guess that answers that question. Thank you. And one other thing, I'm not sure if you had addressed the contention raised by the taxpayer that even their sale of salads on the premises should be not taxable. I'm not sure if you wanted to address that aspect or not.
Yeah, if it is if salad consumed on the premises is taxable, but if it is to go and if the taxpayer keeps separate records, then is exempt. If it is but for this taxpayer, we concluded that the taxpayer comes under the 80/80 rule, and also based on the sales receipt, we found taxpayer charge tax on both hot and cold food to go, and we during the field work, the taxpayer did not provide any information to show that they have cold food to go with reasonable documentation.
Okay.
And Judge Quee, I'd just like to add that Regulation 1603C provides that cold food, when consumed at the at facilities of the retailer, which would be dine-in or at their outside tables, is taxable.
Okay, great. Thank you. I will turn it back to Judge Long then.
Thank you. Ms. Huff, we'll move on to your closing presentation. You asked for 5 minutes.
Yes, I just like to repeat and ask that what we're requesting is that historical information from other salad farm restaurants be gathered in order to conduct an appropriate observation. I also like to mention that they have the Cdtfa has brought up the fact that we sold beer. Beer was it didn't go well with the business. So after the first 6 months, we did not sell beer anymore, and we never renewed the license. And that the restaurant did close on February 28, 2016, not June 30th, 2016. Probably that's when the last bank statement was sent out in June. But we actually closed. We did not open the first day of March. We did have seating areas, but mainly, most of the tables were empty, and we did have also an outside area. But that outside area in the city of Claremont, it wasn't just specifically for my restaurant. There is a Chinese restaurant to me, and a lot of the times they will use my seating area outside because they didn't have enough space. But most of my food was just to go. Again, we're surrounded by 6 private universities, and most of them were teachers, students that would come and get the salads, and it was always to go. Most of it was to go, not to eat in the area, in the restaurant. And so I asked the OTA that a sincere effort be made. This is not something I want to do. I don't want to be here. I don't want to have any more contact with the Cdtfa. I have gone through hell and back, sir. My house had a lien of $108,000, And apparently the explanation that I got from the Cdtfa was that it was a computer error and it was something out of their control. Well, the robbery was definitely out of my control, sir. If that would have not happened, I would still probably be in business because that was my life savings and my late husband's savings. It all went into the restaurant and it was all lost. This is not something I wanted to do. The robbery occurred and it was completely out of my control, like the computer made the error, and a lien against my house that is worth $300,000. They put a lien of $108,000. So the state of California wants a third of my property for something that I had no control over it. Thank you.
Thank you. I do have a few final questions before we conclude. I just want to check in with Cdtfa. My understanding is that even though the seller's permit was closed on June 30th, the closure date, the end of February closure date was agreed upon. Is that correct?
We use the bank statement, so the last 3 months there were no deposits. So the sales only determine up to February 2016.
Okay, thank you. And then, in addition, just want to ask Ms. Huff, with respect to the robbery, I understand that you have the police report information, or we have all of the police report information that you could obtain. Was there an insurance claim with respect to the robbery or anything of that kind?
I did not do anything. I was done with it. I did not file any claims. I did have insurance, but I did not file any insurance claims, sir.
Okay, thank you. And then I just wanted to mention, with respect to the other salad farm operations, OTA is an independent and neutral agency, and we're not responsible for the auditing, and we actually are not allowed to examine information outside of the record for the appeal in front of us. So OTA itself would not be able to investigate the other salad farm operations. So I just want to make that clear before we concluded. Okay? I just want to make sure that my co-panelists don't have any other questions. Judge Stanley looks like a no. Judge Quee?
This is Judge Quee. I don't have any further questions. Thank you.
Okay, thank you. Then this concludes today's hearing for the appeal of Huff Foods. The record is now closed, and a decision can be expected within 100 days.